Everything that happened in this order, I told him 3.5, 4 years ago was gonna happen. I personally have an impossible time believing what I'm seeing from him. People will slam on him. I think there's gonna be significant fallout from this decision. He thinks he's a victim. What's going on, cash flow hackers? It's Chris with Life 180, and today we are going through the potential ramifications of the fallout from the cease and desist order that the MPI and Curtis Ray organization received from the state of Washington. Now, if you haven't seen it yet, I did an initial review to the cease and desist order with Curtis Ray, and I'm going to link that above here. If you want to watch this to the end, this is going to be a more brief video because we're talking about something a little bit different. We're talking about the fallout of this and what the ripple effect of this order on Curtis Ray is going to mean, and this order on MPI is going to mean to the rest of the index universal life industry as a whole, and what it could potentially mean as this sets a precedent for insurance commissioners across the country. And so looking at this and looking at how this played out, what I want to do is I want to touch on a couple points, and then I also want to go through a couple thoughts that I have on how this has been being talked about and marketed so far, and really what the fallout's going to be is what it comes down to. So there's a couple things before I get into anything else. There's a couple things that I wanted to cover. First off, so you probably saw my video that I did a 2-hour reaction video towards Caleb when he did an interview with Curtis Ray. Now, in that video, the challenge that I have with it is that it comes off as me. First of all, I got to say, Curtis did a great job in that video as far as positioning himself as a victim and as somebody who just wants to do right and so on and so forth. While this is just my opinion, I will say this. I've had conversations with Curtis personally. I have personally warned him, everything that's going to happen, I've got his order right here. Everything that happened in this order, I told him 3.5, 4 years ago was going to happen. And he vehemently denied that it was going to happen. And so for me, it's really frustrating for him to go on and to hear him talk about the fact that, or, the idea that, he thought he was doing everything above board and right. And so the challenge that I have is, while he's really good at marketing, somebody that is as good as he is at marketing is obviously going to have good coaching, and he's successful, and I'm sure he's got good advisors and good coaches, and they're coaching him through the right things to say. And to his defense, he's got to go through that process, right? Like I get that. You're talking a sizable business with a lot of revenue on the table, and you got to take things into consideration. So I totally understand all that. That said, I personally have an impossible time believing what I'm seeing from him, right? Like believing that he thinks he's a victim. Now, all that said, my opinion doesn't matter. What I want to talk about now is the fact that I think there's going to be significant fallout from this decision from the state of Washington insurance commissioner. I think the ripple effect that this potentially has across other index universal life spaces is going to be significant. And I want to do this by getting into the order a little bit and talking about it because I think it's important. Now you can see here, I've got the entire order here. What page am I on here so I don't lose I'm not going to spend a lot of time. If you haven't seen the video that I did with IUL litigation attorney Robert Rikard that came out on Friday, October 25th, I would say go back and watch my video that came out Friday, October 25th with Robert Rikard. We did a detailed breakdown of this cease and desist order, the whole judgment that came down and the penalty that came down, and we went through the cease and desist order in detail. I'm not going to go through this in detail. That is not the purpose of this. The thing that there's a couple things that I wanted to point out that I just kind of found entertaining, I guess a little comical in a way. And the first one was, he talks about this RELOC feature, which is just basically borrowing against a policy to get more policy. So he believes he's the first to consider using policy loans as additional premium. That is like the craziest thing I've ever heard in my life. There's this thing called hyperfunding, which is basically utilizing policy loans to buy more policies. It's the same deal. He just calls it a RELOC, and he got a company that was willing to let him do that. I told him that 4 years ago we had the conversation that this is not a new idea, and he seemed to just hold his ground thinking it was. That said, there's a bunch of stuff that comes through on this order that really stood out. He talks about IUL being a holistic retirement plan, which there's nothing holistic about putting money into a product, any kind of product. There's no diversification in that. All your money is in one strategy. That is not holistic at all, right? That is something to consider. And let me see over here. Nope, that's just what he was claiming. So this is the big part right here. So on May 21st, I'm going to zoom way in on this. On May 21st, 2024, the Office of the Insurance Commissioner issued cease and desist order 24-0094, ordering respondents to cease and desist from marketing IUL policies as retirement or investment vehicles. Okay, so this one little piece right here. Granted, he told him he couldn't market the MPI plan as IUL 2.0. There was other stuff, but this part right here is huge because of the fact that we now have an insurance commissioner that has put it in writing that a person is not allowed to market an IUL as a retirement planning vehicle. Now, the funny thing that I got about this is that, if you watched Caleb Williams in Better Wealth, and Caleb's like a brother, I'm actually going to go live. Maybe by the time this is out, it's actually already been published. That maybe we already went live because we're going to do it early before Thanksgiving, or before Halloween, I mean. And so Caleb had Roccy Defrancesco, who's a huge IUL advocate, on the channel, and he interviewed him about his perspective on Curtis Ray and MPI and the whole strategy. And Roccy was really, really hardcore against it, basically calling Curtis an idiot and calling the whole strategy horrible and saying all these things that, I'm not even going to get into the details. They were horrible. The thing that I find crazy about Roccy and his just bashing of Curtis Ray is that Roccy sells IUL for retirement planning as a retirement income vehicle. And I don't care what anybody says about anything. Now we have it with an insurance commissioner saying you can't do this. I've said this for years. The biggest problem that we have in the index universal life space is that it's a top-down problem, meaning it's a carrier problem. The carriers are the ones driving this conversation and leading the conversations and driving the training down to the agents. I remember when I was in the IUL space from 2009 to the middle of 2014, before I pivoted and got out of it because I realized the truth about it all. When I was there, it was still kind of new. That was when like the tax-free retirement book by Patrick Kelly just came out, and that whole conversation really just started to become kind of mainstream. What happened was, before that point in time, insurance companies didn't really push it, right? But what happened is they got on the train, they got on the tax-free retirement train, and they started marketing it, and ultimately they realized the marketing led to sales. And so now companies don't focus on training how the products actually work. They just focus on training how we're going to be able to sell the most amount of products, period. And that goes to the point where, people are making marketing strategies like this. Now, one of the things that I want to say is with Roccy, for instance, the big difference, and this is Roccy, this is any IUL agent that's selling on tax-free retirement. Now, a lot of people like to bang on, and this is where I'll defend Curtis Ray. I won't defend him completely, but he likes to position this RELOC feature as like the golden goose of the situation, right? I'm just going to call it the golden goose, right? Because this is the secret to his success. The RELOC is the golden goose. Now, what is a RELOC? It's basically borrowing to buy more cash value, okay? So when we talk about doing this, this is what he said earlier. This is where he said he's the first to consider. It's what he said. He is the first to consider using policy loans as additional premium, right? No, he's not, first of all. But that's what the RELOC is using policy loans to buy additional premium. So that's what he's saying, okay? So he's going to buy not borrowing to buy more cash value, but borrowing to buy more insurance, which increases cash value, okay? So like the RELOC, he tries to position as this amazing thing. Now, here's the challenge. People will slam on him for doing this, but what is the RELOC? The RELOC equals leverage. And anybody who wants to say that the MPI strategy won't work, but then they still like IUL, or they still agree that IUL has substantive value to add to anybody's personal financial world aside from just the death benefit when we're talking about tax-free retirement. Well, we think about what is the function of this. It's leverage because of the fact that you're borrowing, and let's just say at 5%, even though the rates can change, right? And the idea is you can earn up to a cap. Let's just call that 10% for the sake of it, right? So the idea is the spread between these two could be earned, but they don't talk about the fact that on a 0% year, you pick up an additional 5% expense. So that's why it's a leverage strategy, because you can lose, right? And they like to say that it's safe, and I'm not going to get into the details. I've done all sorts of videos on this. That's not the point of this video, okay? So the idea is the RELOC doesn't work. The people like Roccy that want to smash Curtis Ray for RELOC not being a solid strategy. Well, if here's what I want to say. If RELOC doesn't work, tax-free retirement doesn't work. Why is that the case? Okay, why won't tax-free retirement work if RELOC doesn't work? Because it's the same strategy. You know, with RELOC, it's simply an extra leverage strategy. I'm going to argue that if you believe tax-free retirement would work, whereas you can borrow against the policy for income, and this comes into play. You could either, pay 5%, or, you're going to have a 5% interest expense, and you're going to earn up to the cap of 10%. Once again, I've done a lot of videos on this that prove that this doesn't work. And, if you watch the video with the IUL litigation attorney that shows all the people that have been really hurt by utilizing these strategies, even people like Doug Andrew that he's successfully sued in court nearly 100 times, right? Like, these are the things that we're talking about all the time. So if we're talking about tax-free retirement or RELOC, it's still the same leverage strategy. It's borrowing and expecting that this leverage of this gap, this spread between the 5 and 10%, the cost of the money, right? Cost of money versus what could be earned. That's the idea. So at the end of the day, if you believe that the tax-free retirement will be a leveraged strategy that will work over time and provide that benefit to create that result, well, then you have to believe that the idea of the RELOC will work, because if it doesn't work for one, it doesn't work for the other. That's the reality. So the hypocrisy behind saying, hey, I don't think RELOC's going to work, but this tax-free retirement thing's going to work. It's the same strategy. One is just creating a little bit more leverage, i.e. the RELOC is creating more leverage, but leverage is leverage. And if it's safe leverage for tax-free retirement, why wouldn't it be safe enough to double down on the RELOC? The answer is it's not. But the fact that the judge is seeing this, or the insurance commissioner is seeing this, and they're going this route, and they've advised that they need to remove all videos, marketing material referring IUL as to retirement or investment vehicle, and discontinue use of the terms IUL 2.0. Okay, so the fact that they have to do this here, means to me that they're going to show this in this is going to have a spillover effect into all the other people that are utilizing IULs as this tax-free income vehicle in retirement. This is something that I've seen that would be happening, or that was going to be coming down the pipeline for a long time. And I am just excited now that the truth is finally out there, that we finally have an insurance commissioner that's willing to come forward with this. Now, to Curtis Ray's defense, like, he said it in Caleb's video. He's like, I think they're coming after me because I maybe stretched it a little too much. Maybe I tried to create a little too much leverage, or I can't remember exactly how he said it, but he's basically like, I was the biggest guy, I was the biggest marketer, biggest known name, and he's not wrong. He's right, he was, and they came after him. And my only hope is that there's going to be a ripple effect, so more people can get educated, and more people are going to have to, stop these illicit activities of marketing these products in such a way. Because the bottom line is leverage is leverage. The only area where I want to say, and I'm just going to use Roccy and Curtis as an example, because those are the two people that were on the Better Wealth channel when talking to my buddy Caleb, who I'm going to be talking to this week, is that if you go through most of these policies have what's called an overloan protection rider. So when you look at the overloan protection rider, the key here is if you're 75 or older, the overloan protection rider kicks in. So if you take too many loans and you run into the situation and this whole situation of leverage doesn't work, well, as long as you're 75 or above, they'll keep your policy in force and there will be no taxable event. That's the key. So I'm going to use somebody like Roccy, who would basically work with his clients, and he would use it as a tax-free income vehicle, and maybe his clients wouldn't start touching the money until they're, say, 65. So at 75, that's 10 years into the policy. His clients are a lot more likely by the time they have issues with the policy to at least be at this overloan protection rider age where it kicks in and there's not going to be a taxable event. The problem with the RELOC is that if I'm 44 years old and I started it today, typically the RELOC would start kicking in about 3 years from what I've seen from people's policies that they've shared with me where they're already having problems. And so if the RELOC kicks in at year 3, now at age 47, I'm already kicking policy loans out. So that puts me in a situation where I'm at significant risk because my loan balance is compounding against me and is creating more costs. So on years where the market is zero, that 5% expense, if I have $5 million in loans, a 5% expense is $250,000 of interest expense. And my cash value, if it's less, and I run into a lapse issue, well, now it's a taxable event. And it's not just a taxable event on the premium I've paid or the money that I've taken. It's a taxable event on all loans. All loans are taxable. So if I ended up with a $5 million taxable event, that's going to be a big deal in this situation, right? And if I have a lapse issue before age 75, that's exactly what happens. And so the biggest risk that I see with the RELOC, and this is what I've been trying to tell people forever, and it's great that it's finally come out and the truth is finally coming out, is that the biggest risk is the RELOC because of the fact that it literally suscepts people to these issues. So my encouragement to you would be make sure if you have something like this, if you have any kind of IUL, any IUL, and you're thinking about it from a tax-free income perspective, you're thinking about it through the lens of what do I do, for moving forward? What are my options? Because like if you fund it for a year, 2 years, 5 years, 10 years, I had somebody that submitted a policy yesterday that was in year 7. They thought they were fully funded at year 5, and they'd put $300,000 a year into a policy. And at year 7, they're already behind. They've already taken loans. They don't even understand what they're involved with, and they're already upside down, and they got a big problem, right? Even though on paper it doesn't look that bad, when you do the projections moving forward based on the variables that have changed and the cap rates being reduced and all these different variables, it's really not a good situation for them moving forward. They're not earning the positive arbitrage that they thought they would be earning, the positive spread between the cost of the loan and the crediting that's being, that they thought they were going to be earning. And so if that's you, I would say go down in the link below. I've got a link. I'm just going to keep putting the link for Robert Rikard, the litigation attorney. If you want to reach out to him, feel free, go reach out to him and his team. They are just trying to serve people that are in this situation. I think it'll be really, really beneficial for you to do that. Just get clarity. I'm a big believer, don't throw good money after bad. If you want help evaluating your policies, no matter who they're with, whether it's like with MPI or any other company, it doesn't really matter. Whether it's a Mutual of Omaha, an Allianz, a Nationwide, a Pac Life, a Symetra, doesn't matter. We deal with all these things all the time. I've got an amazing team that's just world-class at evaluating and letting you know what your options are, the best options moving forward, and figuring out and going from there. So I would encourage you, go down in the link below or go to rescuemyiul.com. On that page, you'll have an opportunity to upload your current illustration or, an in-force illustration, which would be current, and then try, if you have it, or upload the original illustration as well, because having those two things together gives us a lot more clarity on how this thing is got the potential to perform moving forward. It kind of shows us what direction it's trending. We can kind of compare them side by side and give you clarity on what it looks like moving forward for you and give you the best options for you. So that's it. So hopefully this makes sense. If you are an IUL agent, listen, I know a lot of people got into this business. You joined WFG and PHP and PFA and all these IUL companies and that are IMOs that are selling IULs, and they do it under the guise of financial literacy and financial education, and they try to position these IULs as great tax-free income vehicles. But the reality is it's dangerous, and relationships are getting hurt, and people are getting hurt. And if that's you, I really encourage you to think long and hard about what you're doing. Look at this. Think about what the insurance commissioner is doing. Think about the fact that if you're doing whatever you're doing, you need it to stand the test of time because your relationships are going to be there. And you don't want people to be hurt on your advice based on something that you don't fully understand. And the reality is the insurance companies, the carrier training is the worst. I mean, Mutual of Omaha is one of the biggest companies that works with MPI. They know exactly what he's doing. They don't care. They know what's happening. They don't care, right? Every company is the same way. And they just want to push what is going to sell. That's the training they do. I know that because I used to be the director of business development for one of the top companies in the country. And that's one of the reasons I left, because I couldn't ethically get behind it. So I hope that makes sense. If you have any questions, comment in the comment section below. I look forward to engaging with every single one of you. Go to rescuemyiul.com if you have a specific situation you want help with, or if you are somebody who's looking and you want to have a conversation with somebody on the Life 180 team directly, go to life180.com/clarity-call or click on the link below and they can help you there as well. And that's it for now. Have a blessed, inspirational day. We'll talk soon. See ya.